Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money games behind the scenes when it comes to corporate filings. Today we're diving into BeyondSpring Incorporated's latest report, and it looks like they've been busy signing some important deals. Stick around to find out what it all means. Also, before we dive in, if you love getting clear insights from these official documents, make sure you are subscribed. And hey, we have a community over on Discord where we chat about all things corporate finance. You can find the link in the description below. So what is the big news here? Well, BeyondSpring Incorporated, or BZ as it is known on the stock market, has entered into a significant agreement. This filing is all about a securities purchase agreement, meaning they've agreed to sell a chunk of their company's stock. Think of it like this: the company needed money and they decided to sell more of their ownership pieces to an investor. The key player on the other side of this deal is Ray Beauty Group Limited, who is acting as the investor. They agreed to buy a specific number of BeyondSpring's ordinary shares. The price for these shares was set at $2.50 per S-share. This transaction essentially brought in $2 million for BeyondSpring before any fees or expenses were taken out. They managed to get this done, and the deal officially closed on the 21st of November 2025. This infusion of cash is important for any company. It can be used for various things like funding new projects, expanding operations, paying off debts, or just having a cushion for future uncertainties. For BeyondSpring, this means they have more resources to work with. Now, it is interesting to note how this offering was structured. It was a registered offering, which means they filed a registration statement with the US Securities and Exchange Commission, or the CC. This filing is essentially a public announcement and a detailed disclosure about the shares being sold to make sure everything is above board for investors. It went through a few amendments and was declared effective in August of 2025. One common condition in these types of deals is a lockup period. For Ray Beauty Group Limited, this means they have agreed not to sell these newly purchased shares for 60 days after the deal closed. They also cannot enter into any complicated financial arrangements with these shares, or even announce that they are considering doing so without getting permission from BeyondSpring first. This is to help stabilize the stock price and prevent immediate selling pressure right after the offering. The company is officially registered as BeyondSpring Incorporated, and its shares are traded on the Nasdaq Stock Market LLC under the ticker symbol BZ. These are ordinary shares with a very small par value of $0.0001. Per S-share, par value is mostly a legal concept and does not reflect the actual market value of the shares. The report is signed by Lan Huang, who holds the important titles of Chairperson and Chief Executive Officer. This indicates that the leadership of the company has approved this filing and the transactions within. Looking at the exhibits attached to this filing, we see legal opinions from their Cayman Islands Council Maples and Calder. This is standard practice to ensure the legal validity of the shares being issued. And importantly, Exhibit 10.1 contains the full securities purchase agreement itself, a very detailed document outlining all the terms and conditions of the deal between BeyondSpring and Ray Beauty Group Limited. We also have the consent from the legal counsel Maples and Calder, which is usually included within their opinion. Finally, there is Exhibit 104, which is the cover page interactive data file. This is for all the tech people who like to crunch numbers automatically. So what does this all mean for BeyondSpring and its investors? Well, on the surface, it is a positive development. The company successfully raised $2 million, which is a good chunk of change, especially for a company that might be in a growth phase or looking to fund specific project. The registered offering and the lockup period suggest a structured and professional approach to this capital raise. It shows that the company is actively managing its finances and seeking opportunities to grow. However, as investors, we always need to look a bit deeper. $2 million is a substantial amount, but depending on BeyondSpring's specific needs and ongoing expenses, it might be a one-time boost rather than a long-term solution. We should also consider how this money will be used. Is it to launch a new drug, develop a new technology, or cover operational costs? The company's strategy for deploying this capital will be crucial in determining its future success. The fact that they are selling shares means they are diluting existing shareholders' ownership slightly. So while the company has more cash, each existing share now represents a smaller piece of the pie. This is a trade-off companies often make when they need funding for growth. For investors, it is important to weigh the potential benefits of this growth against the dilution. We don't have detailed financial tables in this particular filing to analyze their revenue or profit trends, but this securities purchase agreement is a clear indicator that the company is moving forward with its plans. It is a sign of proactive management. The lock-up period for the investor is also designed to provide market stability, which is a good sign for those already invested in BIs. In the bigger picture, BeyondSpring operates in the biotechnology sector, which is known for its high-risk, high-reward nature. Companies in this space often require significant capital for research development and clinical trials. Therefore, transactions like these are not uncommon and can be vital for their survival and expansion. The key question is whether this capital raise will sufficiently propel the company towards its long-term goals. Alright, looking at this filing, it appears BeyondSpring Inc. has secured some much needed funding through a strategic agreement with Ray Beauty Group Limited. This $2 million injection is a positive step suggesting the company is actively pursuing its objectives. The structured offering and the lockup period indicate a well-managed process aimed at market stability. Now, looking at this more broadly, BeyondSpring operates in a dynamic and capital-intensive industry. While this funding is undoubtedly beneficial, its ultimate impact will depend on how effectively the company deploys these new resources to drive innovation and achieve its milestones. The dilution of existing shares is a common consequence of such offerings, and shareholders will be keen to see a return on this investment through future growth and profitability. In conclusion, BeyondSpring Inc. has taken a significant financial step by issuing new shares. This move is aimed at strengthening its financial position and enabling future growth initiatives. Investors will want to closely monitor how this capital is utilized and its impact on the company's pipeline and market performance. That is our breakdown of BeyondSpring Incorporated's latest filing. What is your take on this funding deal and what it signifies for the company's future? Let me know your thoughts in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more deep dives into the corporate world. And don't forget to join our Discord community for more discussions like this. Thanks for watching and see you in the next video.